Hey, Frank. Thanks for the excellent question. And instead of trying to answer it in text format, I figured I'd just make you a video to give you a proper answer that question deserves. All right. So first thing, let's cover just a couple of super basic things about Elliott wave, starting with these what I would consider other considerations. This kind of stuff is very subjective, but the first thing you want to do, in your case, if you're looking for potential wave four, you got to back up a bit and look at the entire structure because Elliott wave, where its strength is, it's giving you an idea of structure in context of the larger structure. So, like a lot of methodologies, including Armando's, he's not just looking at one time frame, right? Like he's not only looking at the 5 minute and the 15. I mean, he's looking at the weekly and the daily and the 4 hour and the 8 hour and getting context for this structure. And then you drill on down and find something more actionable. Very similar with Elliott wave. So what I do is check out the next higher degree wave structure, then zoom out again and check out the next highest wave degree structure. So in other words, I like to back up 3 wave degrees from the one I'm looking at, which is equivalent to zooming out on a time frame. Like if you were looking at a candlestick chart, you want to zoom out and then zoom back in. Same thing with Elliott wave, except we call them degrees. So just for example, because I zoomed out on silver, I was looking for a deeper correction based on my view of the count of the next higher degree. So that is what allowed me to sort of formulate my own bias based on structure. And then you let price, as price waves unfold, they produce more and more clues to either prove you right or prove you wrong. So now let's go ahead and dive into the actual structure of price here. Okay. All right. So this is where we are now at this degree. And what I was suggesting we do is back up to the next higher degree, which is this wave right here. 1 degree higher than that is this 1, 2. And then the way I'm viewing this is what is called a nested 1, 2, which just means it's a 1, 2 count followed by another 1. And then I'm looking for a wave 2. So it's a nested 1, 2, 1, 2. Well, what that means for me is when I back up, as I was just telling you, and look at the higher degree, which is this wave right here, because I'm viewing that wave as 5 up. And as you know, because you've been following me through this whole move in silver, so you know how I was counting this as 5 up. And then because I counted that as 5 up, I'm looking for not a retrace to the 382, but I'm looking for a retrace to a minimum of 50%, just because of the way I think about silver, looking for a wave 2. So when this came down to the 382 and bounced, I was not thinking that the low is in and we're just going to go higher from here, only because it only retraced 382 of this entire move up, of a 5-wave move up. So after a 5-wave move up, I'm looking for at least 50 to 618 retrace. So the way this bounced did not make a new high, and also the structure of this bounce, which got a little weird in here, I called it a B wave. Then we got what should come after a B wave is a C wave, which typically is composed of 5 waves, and that's what I got here. And the way I was counting it was a 5-wave move down. Now here is where I first started thinking maybe this is the low. But because it only came to 50%, I was willing for that to be the low, but then that would necessitate a certain type of structure, which if this was the low, it should be very clear 5-wave structure off of the low. And initially it started out very well, but then this got so extended that the subwaves of this structure had me calling it a B wave. And you guys may remember this if you were following me, because I was saying don't get fooled by the banana in the tailpipe, which is my funny way of saying when it's a B wave, it gets the bulls all crazy and they start creating this kind of a wick, which exceeds the standard 5-wave move by a lot. So in other words, the structure got out of whack. So I started thinking B wave. And then with the reaction, when this finally let go, it sure to confirm that it's a B wave. Because if this was anything other than a B, like maybe it was a wave 3, then the wave 4 should have stopped right here, but it didn't. kept going. So that's what allowed me to measure and continually look for a lower low. Then off of this low here, this is in the range of that 618, very near the range of the 618. So that got my attention. And then we did have a nice reaction off of there. Okay, so now I'm really getting into the details of answering your question, because I know I just went a long way around, but I can't answer your question effectively without giving you broader context and making sure you understand how I'm thinking of the broader context and how this current wave structure relates to the larger structure. So if this is the low, I want to see a 5-wave structure. So the way I'm counting this and the way you count for wave 4s is wherever you think the wave 3 has topped, the pullback is typically going to fall between the 236 and the 382. All right, now initially I was thinking this was the top of this white wave 3 initially. And the way this was a shallow pullback, meaning in my view, I'm looking for, of this degree, I'm looking for a wave 4 to go more like 382 to 50%. And with where this was originally coming to, let me show you what I mean. Oh, wrong. This one. So when I was measuring it from here, which is the bottom of wave 2, if this was the top of wave 3 of this same degree, this is too shallow. It only came between the 236 and the 382, which honestly is an acceptable ratio for wave 4. But because of the increased volatility in the way silver behaves, I'm looking for a wave 4 that came deeper. Also, because this wave 2 was so shallow that I was expecting a wave 4 to come deeper. So when I put the fib tool here and I see that this is really an ideal looking wave 4 in relation to this being wave 2, then it occurred to me, aha, so maybe this is the wave 4 of this degree, because as you know, or maybe you don't know, Elliott wave is all about the fractals, meaning self-similar at scale. So inside of this wave 3 is another 5-wave structure, meaning this should follow 1, 2, 3, 4, 5 for wave 3. So that's the way I measured it. But then an additional clue, now I'm getting, this video is already too long, but there's something called a ratio, and that's this measurement up here. So this purple count for these purple fibs right here extends in a wave 5 up into this zone somewhere up here. And I don't want to make this video any longer than it is. Nothing is guaranteed. This isn't a sure thing. This is the way I'm counting it. So the way I measured for the wave 4 in review, you put the fib tool at the bottom of where you think wave 2 is. You bring it up to the top of where you think wave 3 is. And you want to look for the 236, 382. And quite honestly, the way I do it, I'm always looking for the 50% fib as well. That is, anywhere in this range is an ideal scenario for a wave 4. Now, I don't only use this view. Then what I do is I drop down to a 1-hour chart or a 21-minute chart, and I look at the internal structure of this wave 4 on a lower time frame, and I want to see a clear 3-wave structure, because wave 4 should be made up of 3 waves. That's a whole nother video, but the point is this behaved well, wicking down below the 382. Didn't even get a close below the 382. It's very, very nice, clean, shallow wave 4. So that's why I think it's the lesser degree, which means that a wave 5 is going to extend a little more. So now what I'll be looking for is the next degree wave 4, which often terminates in the same vicinity as the lesser degree wave 4. So if this price can get up into this box and not exceed it, but actually get up here and get a nice reaction, you want to see at some point, you want to see some big 1-hour candles coming down out of this box. And then I'll start measuring and looking for wave 4. This is the next wave 4. Then you get one more shove higher for wave 5. And all of this, my friend, brings you to the top of a 3rd wave inside of a larger degree 3rd wave. So after this wave 3, you're going to have another wave 4 and another big wave 5. And I think that's the one that's going to take us up way up here. I know, it's just crazy. We're crazy talk. You could end up way up here for that wave 3. Call it 39. This is not me making up those numbers pie in the sky. They're just simple Fibonacci extension. This is the golden mean, 1.618, but it's taken from the larger degree. So I know I just said a lot, but that is the answer to your question about how are you really measuring for any wave 4. It's you put the fib tool at the bottom of what you think is wave 2, drag it up to wave 3, look for the 2, 3, 382 or 50%. And by the way, wherever this tops from and starts coming down, I'm going to put my tool at the bottom of this wave 2, the top of wherever this tops out, and I'm going to be looking for the 2, 3, 6, 382 to 50% of this move higher for the next degree wave 4. Another clue is the way it starts coming down, because it should come down in an overlapping corrective manner, as opposed to the way this is moving up in an impulsive 5-wave manner. The wave 4 is going to take on a more complex structure. Cool. Hope this helps. And just remember, it takes a long time to really understand Elliott wave and to learn it. So just learn little bits at a time as you go along and start getting in the habit of using, for example, this wave 4, just get in the habit of measuring stuff. I mean, really, that's how I got good at Elliott wave, is by measuring stuff constantly and not getting attached to what I see in the measurements. It's objective, detached, unemotional. You perform analysis cold-hearted. And then the trick is, when you start actually making your trades, you're going to start having the same mental disposition of cold detachment when you're placing your trade as you do when you're performing the analysis. That's when I'm at my best. Just a clue, just another hint. All right. Thank you for watching. And listen, if you haven't liked or subscribed to the YouTube, you can do that only so that when I make a video about one of these instruments and you're not seeing, because I'm not posting this stuff all in Armando's room, but I am putting it on YouTube, you know, out of respect for Armando's work, and also just to keep the room clean and uncluttered. Look, we're all here for Armando. I'm here for Armando too. So, you know, consider this just an auxiliary thing to learn, but Armando's fibs is really what you need to learn, and learn how to read supply demand zone, learn how to read price action the way Armando is teaching it. Far simpler, far easier to give you a direct pathway to success. Elliott wave is great for leaving your runner on and looking at the outlier targets, or if you're a swing trader. Like, how else would you know that I'm looking for $38 in silver? I mean, it's not just me making up that number. It's a fib level based on Elliott wave. So Armando's stuff, he's the scalping king. And also, if you're looking for an entry, still use Armando's method to get the best entry based on price action and supply and demand. So anyway, I'm talking too long here, but I hope this is helpful. If it is, like, subscribe, share. Appreciate it. I'll see you in Armando's room. In case you're watching this and you don't know who I'm talking about, Armando is the Professor Trades. His links are all in my YouTube page. Go there, check him out. You'll see me there too. Cool. See ya. Bye-bye.